A sudden shift is shaking up the US housing market, and it's catching almost everyone off guard. After years of crushing mortgage rates, frozen listings, and sky-high prices, affordability just hit its highest point in 3 years. That's right. For the first time since before the pandemic housing boom, buyers are getting an actual break. But hold on, this isn't the whole story. While affordability ticks up, the number of homes actually selling remains stuck near historic lows. And on top of that, mortgage rates are already starting to climb again. So what are we actually looking at here? A rebounding market or a dangerous bubble waiting to snap? Let's break this down. According to new data from Zillow, the recent dip in mortgage rates, even though small, has opened a window many buyers weren't expecting. Monthly payments on a typical home dropped enough to unlock the best affordability levels in 3 years. For first-time buyers who've been locked out since 2020, this is the first real sign of hope. More people are touring homes. More mortgage applications are being filed. And in some cities, bidding wars are even creeping back into the conversation. But don't celebrate yet, because this short-lived window may already be closing. Even with a bump in affordability, the actual market remains nearly motionless. Nationwide, only about 2.8% of homes have sold this year, meaning more than 97% of homeowners chose not to move. That's a level of stillness rivaling the early pandemic. Why so frozen? Homeowners with 2 to 3% mortgage rates don't want to give them up. New listings remain scarce, down in many regions. Inventory is tight, making it hard for buyers to even find homes. Builders aren't building fast enough to fill the gap. So yes, affordability improved, but there aren't many homes to actually buy. Here's where the story gets complicated. Just as affordability improved, mortgage rates began inching upward again. Some analysts warn that by winter, we could see another round of rate increases. The exact thing that froze the market in the first place. This leaves buyers in a tricky position. Move now with limited options, or wait and risk higher payments later. It's a race against time, and a lot of experts think this affordability moment could vanish as quickly as it came. Different analysts are split, and each side makes compelling points. Here is why it could be a bubble. Prices are high even with low supply. Any spike in rates could crush demand again. Some markets are showing signs of overheating. On the contrary, this is why it might be a healthy reset. Wage growth has improved this year. Inventory is slowly, very slowly, rising. Buyers are more cautious and informed than during the 2021 frenzy. Whether this becomes a correction or another inflationary boom depends almost entirely on interest rates over the next 3 to 6 months. Let's look at what buyers should watch next. 3 key metrics will decide where the housing market heads next. Number 1, mortgage rates. If they rise above recent highs, affordability evaporates. If they fall again, we're back in business. Number 2, inventory levels. The market needs more listings. Without them, affordability doesn't matter. There's nothing to buy. And number 3, Federal Reserve signals. Any hint about rate cuts or hikes can shift buyer behavior instantly. The next Fed meeting could be one of the most important for housing in years. For buyers, it's a rare moment. Not perfect, but better than the last 3 years. Jumping in now could mean catching the bottom of payment levels, if rates continue rising. For sellers, the frozen market is slowly thawing. If affordability stays decent, demand could return stronger than expected. For everyone watching from the sidelines, this is one of the biggest turning points since the pandemic real estate frenzy. It's not a full recovery, not yet, but it's the first meaningful shift in years. The US housing market is finally moving again, but the path ahead isn't guaranteed. Affordability is improving, but inventory is tight. Rates are dipping, but may rise again. And the market, while thawing, remains fragile. Whether this moment becomes a rebound or the start of something more chaotic depends on what happens next. I'm Zane telling you like it is.